There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. All right, welcome everybody back here for Hard Money. Darren Long, John Scholes, good to have you along. The phone number is new. It's great. You're going to remember 1-877-323-GOLD. You can't mess that up. 1-877-323-GOLD. That is 4653 if you prefer the numeric version. Nothing to see here, folks. That is the title of the show this week, Darren. It's outstanding. I love it. By the way, deltaharbor.com online. If you want to do some more investigation, education on your own, go to the website, deltaharbor.com. Also, youtube.com/Delta Harbor. You will catch these video casts / podcasts anytime you like. Review the old ones, watch the new ones. Always have to learn on before you get investing with precious metals, physical metals you can hold and drop in your foot. That's what we're talking about here over the next hour in Hard Money, like we do every week. So it's good to have you along, Darren. We'll get right into it. It's been a couple of weeks past there. A lot of people talking about the economy, and yet this has not translated into a movement in gold and silver. What gives, brother? Why have we not seen gold and silver move higher? Give me the deets, or the tea, as the kids would say.
Well, thanks, John, for the introduction. Appreciate it as always. And there is a new number there. We'll be running through the show, but it has been frustrating time. But again, having been in this business for 18 years, it's the same thing repeating itself over and over. Just more opportunity. I mean, anybody can look at a chart any time of day, any time of night, John, and see that gold has performed extremely well. I do, and it happens quite often, we talk to clients, potential clients, who ask the same question. And the truth is that gold has been range bound as of late, bouncing between the 1750 to 1810 mark for several months. And given the inflationary environment, I think one would expect, as we all would, that gold would be soaring right now. And you have to step back and look at the big picture. If you go back to 2000, back before we started, the price of gold was at a bottom of a 20-year bear market that began in 1980. And in 1980, gold was at about $8.50 an ounce, up from $35 an ounce when Nixon slammed shut the cold window and eliminated the last vestige of the gold standard in the U.S. back in 1971. So during that whole 10-year, that decade, the 70s, basically gold went on a tangent, and it didn't do so in a straight line. There were periods of pullback, periods that frustrated people, periods where the price was range bound. And in the early 80s, the Federal Reserve Chair Paul Volcker went to war against inflation of the 1970s. And he pushed interest rates towards 20% in the US. And of course, we followed here in Canada, and it moved mortgage rates up into double digits. I remember very early in the 1980s when my family was buying or looking at buying a house, my dad being amazed when he sat down and did the numbers because the mortgage rate was going to be offered at around 21%. And we can't even fathom that now. But back then, homes were, 4 or 5 times multiple of your income. So they weren't going to kill you. Unlike today, where houses are between 8 and 16 times multiples of your income, where if you experience, we just can't have double-digit inflation rates and double-digit mortgage rates. Nobody will be able to afford to pay for their home. But pushing those rates up towards that in the 1980s, Volcker, he saved the US dollar and he brought the price of gold back down. And over the next 2 decades, the price of gold ran up from under 300 an ounce to over 2,000 an ounce in 2020, and that was over about a 566% increase. So the moment we started fearing inflation again, even on the small front back in the early 2000s, was the moment again we start to see gold and silver perform. And since then, the price has pulled back since last year's peak of around 2,000 an ounce to the 1,800 range, and it's been stuck in that range as investors have anticipated that the Federal Reserve will step in and tighten monetary policy to deal with rising inflationary pressure. Now, this all comes together very easily, John, because we expect the price of gold to resume its upwards trend, along with silver for sure, no doubt about it, and move much higher than $2,000 an ounce as people begin to digest the enormity of the economic problems that really exist here today. And as they come to terms with the fact that inflation is not only transitory, it's here to stay. It's not only not in transitory, it's here to stay. Pardon me. It's going to get much, much worse. And we've talked about it in so many shows in so many different ways. And the Fed can't do anything about it, at least not that they're willing to do, without creating another crisis, which they won't do. And even if they inadvertently created a financial crisis, we already know what their response would be. It would be more inflation. They would print more money. They would bail everybody out and all of their friends. And so ultimately, that's going to be positive for gold as well. People just have to be patient here. They have to use this as an opportunity. The direction is clear. That's up in pricing, and it's going to be for some time. Our clients right now that are existing, John, are accumulating and using this as an opportunity to better prepare for what lies ahead. Gold's currently sitting just over 1,800. Silver's just below 24 an ounce. And again, a big welcome to all of our clients this week. Popular products of the week, 100-ounce Royal Canadian Mint Silver Bar. It never ceases to amaze me. Every week is different, but it is an interesting time for sure.
Again, the new phone number to reach out to Darren and the team anytime, 1-877-323-GOLD, 1-877-323-GOLD. It is just that simple. The recent jobs report came out in the U.S. It looked all right to the average viewer, but you think there's more to it than that, Darren?
I do, John, and this show is nothing. We entitled it "Nothing to See Here, Folks," and really, this goes hand in hand with what the policymakers, the central bankers, want you to see, which is nothing. They want you to think everything's fine. The employment report came out, and the employment in October wasn't really that bad. According to the Bureau of Labor Statistics in October, in the U.S., total employment rose by 531,000 jobs, and unemployment it fell by 0.2% to 4.6%. Labor force participation was unchanged at around 61.6%, and average hourly earnings, which was a big, huge feather in their cap, rose by about 11 cents to $30.96 per hour on average. And curiously enough, in that report, the BLS noted, and they put it in bold, that over the past 12 months, I quote, over the past 12 months, average hourly earnings have increased by 4.9%. So taking the BLS at face value, obviously this tells us that wages are rising. We should be, ecstatic, and they'll use this to the nth degree. Your mainstream media, CNBC's, Bloomberg's, all of them will tell you and throw that number out there that things look rosy. However, also, according to the BLS, the latest inflation report, it shows prices rising 5.4% over the last 12 months. So they had a gain of 4.9% in wage increases, accompanied by an inflation rate of 5.4%. You can see where I'm going with this, John. You can tell right now that there is a major problem here, and we're not going to resolve it anytime soon.
We got a break in a couple of minutes, but I want to get to this. And average inflation is not transitory; it is with us to stay. And it turns out the Feds and the U.S. have announced as of this week that they're beginning the process of tapering their spending. Right. So, do you think this helps? And what does this mean overall, especially on this side of the border? Right.
Well, the Federal Reserve said Wednesday it will begin tapering the pace of its asset purchases later in November. On a monthly basis, the reduction will see $10 billion less in treasuries and $5 billion less in mortgage-backed securities. There was also only a slight change to Fed's view on inflation in the notes. The post-meeting statement kept the word transitory to describe price increases that are running at 30-year highs. So they're wrong. They're off. They can't get it right, and they can't do anything about it, because if they allow interest rates to rise too fast, they're going to kill the golden goose. They'll kill the housing market. They'll kill any economic growth they have. And gold, to a lesser extent, silver are safe havens to these conditions of inflationary problems. So when we come back, we should definitely talk about that. We'll talk more about what the Feds said this week, what it means for our economy and the world at large. And we'll talk about how to get gold and silver into your portfolio. This is the time to do it. Accumulate slowly. Whether you want to add gold or silver, we'll talk about the ways to do it when we return after break.
We sure will. DeltaHarbor.com to reach out anytime for more details. The new phone number, 1-877-323-GOLD. Again, 1-877-323-GOLD. Dial it, talk to the guys, and get educated. We'll continue more hard money right here, Sauga 960. All right. Thanks for hanging on. Hard Money continues here. Sauga 960, Darren Long, deltaharbor.com. That's Harbor with a U, because this investment in physical precious metals is always about you. You want to reach out. The newly minted phone number is this: 1-877-323-GOLD. That's 4653. 1-877-323-GOLD to dial in and talk to Darren and the rest of the team. This is physical metals. This is a part of your portfolio which may be lacking. Not asking you to swap everything over to physical metals, but there should be a portion of it in there. And if you're not very well educated, for the last several months, we've been doing this show. We continue to do it every week until you get comfortable with making that phone call and going down that road for sure. But we were talking before the break, Darren, about the Fed, what's going on there, what they're, I wouldn't say smoke and mirrors, but what they're projecting to the public down there writ large. And then that affects us up here as well. And I know you're right in the middle of giving us some details about that, pal. So continue.
Well, they sneeze, we get a cold.
Yep.
And that's the way it's always been, John. And they peeled back both their treasury purchasing program as well as their mortgage-backed securities program this week by 10 billion and 5 billion respectively, but they're still buying. I mean, they're still buying treasuries. They're still buying mortgage-backed securities. They're still adding all the bad into the pot, and they're still calling inflation transitory. And I mean, this is getting really bad. We're at the point now where you can't even do shopping without having to be prepared to accept an alternative for different products you want, for different brands you want. Just this week is a perfect example. We were doing the little bit of shopping for the children for winter so that they have all their winter clothing. Mm-hmm. There is nothing. It's all last year's what's left over, and they just tell you it's still on its way. It's still in shipping containers. It's still being sent. We talked about the supply chain problems weeks and weeks ago. You got to be prepared, John. This is not a good situation to be in. Our economy, seemingly on the outside, has a ton of headlines telling you that there are some great growth signs. Unemployment is falling. Jobs report both in Canada and the US very positive, but did that wage increase report look so good when they tell you that wages increased in the last 12 months by 4.9%, but inflation increased over 5%? Obviously, it's a net loss. So we're not, in fact, seeing our dollar go as far, and that translates into the way we invest. So we use gold and silver. They are safe haven assets. And as these inflationary pressures continue to mount and become more extreme, investors, they turn to gold, which leads to my next point, which is both gold and silver serve and have always served in part as excellent ways to diversify wealth. They are tangible when you're using the system through Delta, which is to buy physical gold and silver. And most importantly, as the rest of this uncertain future lies ahead of us and potentially could wreak havoc at any moment with any number of triggers, equity markets are going to get weaker. You want to have good diversified portfolio. It's not suggesting that you have all your eggs in one basket, but the Fed is going to keep the money spigots pumping out free money. Only the Fed is going to pump out a little slightly less of it this week. And that's all the report. That's all the report said. That's all it really was just, hey, great news. We're pumping out less money, but we're still pumping out money. So are you afraid? Are you worried? You should be. I think there are ways to combat it, though. And physical gold and silver is one of them.
So, I mean, exactly that. By the way, the new number, 1-877-323-GOLD to reach out to Darren and the team, get educated, ask some questions, have a conversation, deltaharbor.com. That's Harbor with a U. So how do we get some? How do we give me some of that gold and silver, brother? How do we get our hands on it? And I literally mean our hands on it to bolster our portfolios here with Delta Harbor.
Well, the website's a great place to start. The deltaharbor.com website, Harbor with a U, is chock full of information. And if you click the product section, you have a store where you can shop online, set up an account, buy your product online, connect with one of our representatives and have it shipped directly to you. That's one option. A second is storage. You want to buy a large amount and you want it to be safe and liquid, able to be bought and sold by phone call. You can just simply set up a storage account and put it there. It's allocated and segregated. You can choose the type of product you want and you can visit your product. The third option is registered accounts. We'll talk a little bit about that more in the show as we go on here, but you can put gold and silver into your TFSAs, RSPs, pensions, LIRAs, spousal RSPs, RIFs, LIFs, and even for the kids, an RESP. So you have the option, and with the RESP, you get a great kickback from the government And that is a bonus icing on the cake, so to speak, in terms of what they put into your account for you. So that's an option as well. And John, we make it easy as we can. We just try to get everybody over to deltaharbor.com or to call the number that you throw out all the time, the new number.
Yes, that's right. 1-877-323-GOLD. I love it. So simple. 1-877-323-GOLD. You snuck in there in the last segment. I guess you called it, buying a bit over time, or, kind of spreading it around throughout the year. I guess the real term would be cost averaging. I mean, is that also a good way to do it with Delta Harbor?
Well, I think it is, because these moves in gold and silver don't happen all at once. They are not straight lines. Given that we've had a couple of months of range-bound activity, some people might look at that and say, well, what the heck is going on? And in the first segment, we talked about this expectation of gold and silver to go much higher given the threats of inflation. But sometimes they're the last to move. They were in the early 2000s. Most of the other commodity spaces were taking off like wildfire. We saw copper and other metals and food items and oil start to rise towards 2008's high of 150 a barrel US for West Texas Intermediate. And ultimately, those things have all happened ahead of gold and silver. Right. Gold and silver had their biggest move between 2008 and 2011, and both metals, they were range bound for about 24 months, and all of a sudden, boom, without too much in the way of a trigger, just some economic news, the fundamentals kicked in and both metals took off. So cost averaging is a great thing, John. Put a little bit in every month. You can do that in the registered accounts. You can do that on our buying plan, or you can just make a call once a month and say, I'm ready to buy a little more gold or silver, and add it to your delivery home to your address anywhere in Canada or North America.
You always have you always maintain that wise position, Darren, of looking back in the past, because you got to know your history. Otherwise, you're bound to repeat it. That can be good or bad, I guess. But you always talk about that. What went down with gold and silver in the 70s? I know you already talked about coming off the gold standard with Nixon in the first segment. But what went down there as far as the numbers are concerned?
Well, we learn from history, and history repeats itself, John. Yep. So it's a good thing to look at. And that cycle was simple. Gold rose about 2,400% from 71 to 1980, while silver rose around 2,000% during the same period of time. And a lot of that had to do with threat of inflation. The gold standard had been abandoned by Nixon, so money printing, the spigots turned on and went crazy. And during the next 10 years, the monetary base doubled. And that's a pittance in comparison to what it's done since the transition between Bush and Obama. The amount of money printing has taken the monetary base in the U.S. up almost 6 times the amount in a very short span of time, and continues to rise. It's the largest experiment we've ever seen. So the fundamentals that were in place in the 70s are repeating themselves. The threat of oil prices going too high, and oil embargoes being put in place, which we're now hearing about reluctantly. I hate bringing that up because we are so gas reliant in our economy, but ultimately there are serious problems in the 70s. It shows us what happened to gold and silver. Both metals ran up for the better part of the decade, and it was an awesome time to be a part of that. We just want our clients to be a part of that now before all this happens, and gold moves to 3 or 4 or 5 or 10,000 an ounce, and silver does the same thing.
And we'll talk more about that, how to get that portfolio happening. Now is the time to do it. Well, yesterday was the best time to do it. Now's the next best time to do it. So make that phone call, right? 1-877-323-GOLD. That's a new number, 1-877-323-GOLD. Online to deltaharbor.com. Harbor with you. This investment's all about you. And we'll discuss more and educate you more after a short break right here. Hard Money on Sauga 960. Welcome back. This is Hard Money, Sauga 960. If you're just joining us, we're talking about physical metals, the overall picture, physical metals, gold and silver. Are they part of your portfolio, part of your wealth portfolio? If not, they should be. A portion of it anyway. You don't have to transfer everything over to physical metal, but you should have at least a healthy taste in there. And that is 1-877-323-GOLD, the number to call. Darren and Rob and Roy and the rest of the team at Delta Harbor. Get educated. Sit down, have a chat for half hour, for an hour, and learn about these physical metals before you make the move and make that part of your portfolio for sure. DeltaHarbor.com online. You can do your own research right there as well. You can even start an account with these guys really, really quickly. So once you're confident and comfortable, get on it. But Darren talked about the 70s before the break and the skyrocketing prices of gold and silver. in the 70s. There was the whole oil thing going on. Do you see any similarities with what's occurring right now? It kind of reminds you of the 1970s. I know I'm hearing all over the radio about the price of crude and gas and everything going a little haywire. Do you think there is some similarity here in 2021?
Yeah, we're saying about it in the last segment, John, but it does remind me of the 1970s. And it's frustrating to watch gold and silver languish a little when they're surrounded by major catalysts like we see right now. Everything else is going up, and more than frustrating, it's bewildering in some respects. And I'll be the first to admit it, but it gives us a chance as buyers to be able to buy at a relatively decent price. Silver is, it's completely undervalued. I mean, it's ridiculous how cheap silver is. I mean, if I was sitting here and I had an extra million lying around, I would easily put it into silver. It's one of those best case scenarios for silver with a perfect storm brewing right now. And silver was here in the same place as gold back in the 70s, was experiencing some of the same catalysts right now. We had the problem of inflation, that threat of inflation. We had unemployment that was, not significantly high, but it was higher than normal. And right now, same thing. We're not back to those pre-COVID unemployment numbers just yet. The U.S. had experienced a recession during the 70s. That threat is still there now, both here and in the U.S. And we had an energy crisis. You said earlier, oil was incredibly high. There were lineups all over to get it, and some gas stations just couldn't. So there were problems, and that could happen easily again. And yet from 74 to 76, the gold price fell over by 40%, fell down by 40%. So you imagine how many people over that 2-year period gave up and said, to hell with this. I'm not going to be part of this. I don't want to be invested in something that's going down. But we think of gold in the short term in that sense, when we should be thinking of it in the long term. By January of 1980, it rose all the way up to $850 an ounce, and it had been around the $100 mark when it fell 40%. So it was just one of those things that defied logic at the time, but gold and silver always have. And that mid-70s period, as confusing as it was to investors, ended up being only one chapter in gold and silver's life. And the next chapter for those that held on was a whole lot of fun. Silver averaged around $4.50 in 1976, but again, by January of 1980, it rose to $52 an ounce. And this is exactly what is expected to happen going forward right now, John, as we're sitting here watching these markets.
Again, 1-877-323-GOLD. That's the number you want to call now, 1-877-323-GOLD to open your portfolio with these physical precious metals, or just get educated, right? Learn more. It's always good to learn more before you dip that toe in, which I'm sure he'll do after talking to Darren and his team for just a little bit. Along the same lines as back in the 70s with the rise and fall, do you see more of that happening now? Is the landscape similar? Do you think it's going to be a carbon copy, or I'm sure it'll be a dog with different fleas, but what do you think about that?
Definitely a copy. Again, we'll see different things coming from different ways, but as I said earlier, history repeats itself, and the cycle is doing that just now. And the front end of the people who invested in gold and silver between, let's say, 2000 and 2020, very astute, very smart, very sharp. Some obviously might call them risk takers. Others would say very smart to get on board early. But the next wave is the big wave. That's where we take the 1% of people who are invested in gold and silver right now around the world up to 10 or 15 or even 20%. We do not have the physical gold and silver on hand to be able to deliver to that percentage of the public, which means it will be very precious to come by, very hard to come by. And we're seeing all of those warning signs right now. We're seeing the path of inflationary pressures. We're seeing weak economic data behind the headlines of strong economic data. It's a farce. They're sweeping it under the rug. It's the nothing to see here, folks, saying that goes on and on and on with these governments around the world. And we're destined to see weakness in the traditional markets because we haven't seen it for a very long time. So you need to have something physical. And here's the great news, John. If it was to repeat itself today, guess where gold and silver would go? Gold would rise to around $44,000 an ounce, while silver would rise to around 450 plus an ounce. And so this is what we advise. We say, hey, become experts, become your own central banks, own a product which is owned by the central banks, Don't be foolish in thinking that only paper products are going to be the best for you. Get over there to the website deltaharbor.com and educate yourself about why we're owning gold and silver and why they could do great things for you to protect your money, to protect your family, and to grow your wealth moving forward.
Yeah, Darren's right. You head over to the website or call the new number. It's 1-877-323-GOLD. But you always, I mean, as much as you like getting gold and silver physical metals into people's portfolio, I mean, you always preach balance. You're saying don't empty the cart and put it all in one basket. I mean, you always preach balance. You're not a financial advisor. You're not a financial planner. You always give yourself that disclaimer every show. But, is that a key thing to balance someone's wealth strategy with gold and silver?
I believe it is. And I believe that the experts who are tasked with the idea of having to figure out what best balance is sometimes overlook gold and silver, either because they think they're not liquid or because they don't pay a dividend or can't live in them. There are lots of reasons. Maybe they don't pay as big a commission. We need to wake up to these things, because why else would central banks around the world own this product? Why do they cover their rear ends and all the decisions they make and all the money they print and all the treasuries they trade between country to country and have gold to protect themselves? Because they believe in it, because they believe that if there was ever a day in which their system failed or which their country failed, gold would be the one thing that would save them. And it's happened time and time again. How do you think Venezuelans right now are putting food on the table? They're using gold, John. We don't see it in the headlines because the media conglomerates don't want us to see it in the headlines. But the truth is that if you have a relative or could speak to somebody in Venezuela, you'd know that they're using tiny portions of gold to pay for most everyday items for those that can afford it. So imagine being a Venezuelan, having gold in your portfolio, holding it at home in a safe place, and then having no other choice but to say, my paper currency is worth nothing. I might as well burn it as paper to light a fire. And now holding on to gold because gold is the only medium of exchange that survived. There is no Bitcoin. There is no internet equities. There's nothing. It is completely dead in Venezuela. It is complete turmoil. And maybe a person would say, listen, this is not going to happen in Canada, the US. Well, we didn't think 1 in every 7 homes would be in foreclosure in the US after 2008 subprime debacle, but it happened. And it happened while the politicians, while all the bankers, while the central bankers, the planners, your bank managers, and everyone had their finger on the pulse watching. And we saw it happening. We went on air. We told everyone it was going to occur. Have gold in your portfolio, we said. And what happened? Gold and silver rose 300, 400, 500%. It was ridiculous. We were making so much money for our clients, and our clients were so ecstatic and so happy that it got silly. It got completely silly. And now we say the same thing. Balance is everything. You need to speak to the professionals you trust, John. You need to touch base with those that you can put in front of you to have a logical, educated discussion that aren't going to shut you down, that understand that this kind of diversification is the key to being wealthy in the future. It really is.
We'll pick that up after a short break. Darren, again, we'll reiterate how you get some of this physical metals into your portfolio a little later on too. So stick around for that. In the meantime, that phone number 1-877-323-GOLD and Delta Harbor. That's Delta Harbor with a U at deltaharbor.com. We'll continue Hard Money, Sauga 960. All right, welcome back. This is Hard Money. Thank you so much for joining us. If it's your first time, we're talking about physical precious metals, gold and silver specifically, how to open up your portfolio and get that part of wealth management into your portfolio. If you've not done it before, you can go to the e-store. You can start buying right there. You can make the phone call, start educating yourself with Darren and his team. They will talk to you and they will hold your hand through the process. 1-877-323-GOLD. It's just that simple. 1-877-323-GOLD. And deltaharbor.com. I want to get into the discussion, Darren. I know you love talking about real estate. You have real estate holdings. I know you counterbalance it with your holdings as far as physical metals are concerned. But first, last few weeks prior to this week, you had a contest going on for a Royal Canadian Mint silver bar. What went down with that? Who won it?
All right. So during the month of October, and we'll be doing it again in December, all we asked is people to head over to the website. If they're interested, they can sign up for a consultation. It's a 30-minute consultation. It might last less. It might last more. It depends on what questions they have. And we ask people to go through with that. So once they book their 30-minute consultation, They actually go through with it. They have a consultation. They ask questions. There was a lot of entries. A lot of people did it. I thought it was great. It worked really well. So we're going to go do it again in December, and we'll announce that forthright. But the winner for October for the 10-ounce RCM silver bar was Darius. And Darius has been contacted. I won't use his last name here, but Darius, congratulations. You know who you are. And we want to say huge congratulations on behalf of the team at Delta. And we're excited for what lies ahead for you, whether you invest or not. And we want to be able to offer this down the road in December. So we ask that everyone stay tuned and pay attention. Head over to our e-store. It's brand new. Just click the products on our website, the products tab at the top, and that'll take you over to the store. It's online. It's ready for you to use. You can choose the product type from gold and silver, coin, bar, and put it right into your cart and make your purchase right there. Set up payments, set up the account, and do everything online. And it's live pricing. So everything is perfectly in place. You get your volume discounts. They're right there. And it's an exciting time at Delta. We're growing hand over fist, and this is a real big thing for us. So we want to congratulate Darius again for winning that 10-ounce bar.
Nicely done, Darius. He made the move, and he got that consultation happening. And once he gets that 10-ounce bar in his hand, I think he's going to be back, and he'll probably investigate further after talking to you guys and open up that account for more precious metals. But it's a good jump start for sure. You do like to talk about real estate on this show and comparisons and where that market stands as well, Darren. Lots happening here, and it also impacts gold and silver, as we discussed over the last little while. What are the most recent updates you got for me, pal?
Well, twofold. One, a small story, and then two, an article from Better Dwelling. Our friends over at Better Dwelling who do a great job of reporting on the real estate market in Canada. One, the story. I met a new neighbor. He moved in, bought a house down the street, and these houses are your standard suburban detached homes, maybe just a little slightly larger than average. And this home sold for 1.25 million. Wow. And beautiful homes. These are right in our subdivision where we live. And I went down and introduced myself. And the bloke is a tow truck driver. Great guy. Got to know his wife and family and kids, and spent a couple of minutes talking with him. And he told me, I said, "Where did you move from?" He said, "Well, we moved from Etobicoke." And I said, "Really?" So we got to talking about what we do. I found out what he does and what I do. And I found out he was speculating in real estate. And he is the very first person that I heard who bought a home over the last 24 months and lost money. And not only did he do this, about 5 of his colleagues did the same thing. They all bought homes in one of the more near north areas. I won't say the area on air, but it is in the near north, right up the Yonge Street line. And they bought that within the last 24 months. And in fact, a few of the 5 bought it within the last 12 months. And 3 of the 5 so far are losing money. Now, the reason he's losing money, when he factors in the cost of doing the trade or buying the real estate, the legalese that's involved, all of the fees that are associated with the lawyers, the transfers, the taxes, all of those things included in the upgrades and everything that they needed to put into the house in order to make it right, and then factor in what it's sold for. He's among the very first people that I've heard who are actually losing money. And he said, never again will I take the advice of a friend to invest or speculate in real estate. And I said, well, there you go. In a nutshell, that's exactly what happened. He took the advice of a friend, and that's what's happening right now. And so this article, Better Dwelling, it's a pretty simple report. And it was a report that basically was entitled, there is risk in buying Canadian real estate today. Bank of Canada to hike rates 5 times CIBC. Wow. And so essentially what it said was that Canadian real estate is being seen or viewed around the world typically as bulletproof, but more banks are warning that might not be the case. CIBC Capital Markets November forecast shows a steep climb to the overnight rate. They expect the Bank of Canada to hike rates up to 5 times over the next 24 months. Separately, they warned there is a risk in buying in this current rate environment. They see the overnight rate hitting 1.5% by the end of next year after receiving 5 rate hikes. The first rate hike is forecast to happen in September of next year, a little later than other banks have forecast, and it would be followed by one more hike at the end of the year, with the remaining 3 hikes in 2023. And this would put the overnight rate at 6 times its current level. We think that this all begins in honesty by spring of next year, not the end of the year. They always tread lightly on that topic of interest rate hikes. They always project further out so that we can have confidence remain in the economy. And let's not kid ourselves. They are misjudging the threats of inflation, and they have little to no tools to fix the economy if and when a recession hits us hard.
Again, that number to reach out to Darren and the team, and now you might want to investigate even further and more quickly, for sure, with no hesitation. 1-877-323-GOLD is that number. 1-877-323-GOLD. Non-committal. Just make that phone call. Get educated on this part of your portfolio, which may be lacking or non-existent up to this point. And that would be physical metals, Darren. Neil, speaking of tools to fix things, isn't lowering the interest rate one of the only tools the feds have when recession hits? Or we think so anyway, right?
Well, it is, John. When a recession hits, typically, if you look back 100 years, interest rates are at a high or somewhere near that, and they come down in order to combat the threats of recession. Mm-hmm. So we know that the cycle has to endure itself. Otherwise, we're going to end up like Japan, where we have stagflation, deflation, all kinds of different experiences, and they actually lose their standing as the world's second largest economy over the last 15 to 20 years to China. Not necessarily because China is just growing, they are, but Japan was poorly managed, and they're just getting back to that point where they can say, we're not going to make that mistake again, but they can't get any growth. They can't even get any real any organic growth. So This is a problem, John. If we hit recession and interest rates are still low where they are, then God forbid, as we would run the risk of being in the worst case scenario. Therefore, we expect the feds, both here and in the U.S., to continue suggesting inflation is transitory for the short term, while they try desperately to keep rates as low as possible to prevent the false artificial gravy train, taking a page out of the Ford government there, from stopping that was caused by low rates in the first place. I mean, put yourself into this position. Start thinking is what we advise. What we say is just open your eyes to the problems that are around everyone. Put a plan together and include gold and silver in that plan. And John, when we get back before we end the show, we'll talk to people about how to open up an account and how to get it into a registered account with Delta Harbour Assets. This and a lot more. But this is a moment in time where I believe diversification is necessary. You got to use assets like gold and silver to do it. It's a smart play.
We're going to do that after a short break, get into how you open that account and get rolling with this investment. 1-877-323-GOLD is the new number. 1-877-323-GOLD, and online to deltaharbor.com. That's Harbor with you. We'll continue Hard Money on Sauga 960. And welcome back. This is Hard Money, deltaharbor.com, Delta Harbour Assets. If you have not opened up your portfolio, or at least done some due diligence investigation on what it's like to have precious metals, physical metals you can hold and look at in your portfolio as a portion of it anyway. Doesn't have to be the whole kit and caboodle, as my mom would say, but part of it anyway. You want to reach out to Darren and his team. 1-877-323-GOLD. That is how you make that call. 1-877-323-GOLD. deltaharbor.com. That's Harbor with a U. This investment is all about you. And if you want to watch more of these video casts that you're hearing on radio, you can flip over to wherever you get your favorite podcasts. And YouTube, as a matter of fact, is a good place to go. youtube.com/Delta Harbor. Before we went to air, we talked about the beauty, Darren, of being able to put gold and silver in your registered accounts. Still a physical metal, but it's going a different place. It's going in your registered accounts. It could be a TFSA, it could be RSP, RESP, Lira, Lift, RIF, all these different things to get that account happening. Some really good advantages to doing that, opening that registered account with Delta Harbour. Tell me a little more about it, Bill.
Well, precious metals investors wanted a way back in the day when we were doing this very early on to be able to still hold and see their bullion, but to be able to put it into these fantastic vehicles, TFSAs, RSPs, and take advantage of the same benefits that you get with the traditional RSPs and TFSAs. And so back in 2015, I put in a phone call and contact to our now partner Questrade, and I sat down at the table. My group sat down at the table, and we put together the first of its kind account in order to do this. And that connection was made, and it's been a part of it ever since. And it's been a wonderful relationship. And I think a lot of people have followed behind. A lot of other dealers across the country have wanted the same thing. And we were among the first to do it and the largest to do it. And this gives our clients the ability to own physical bars and coins in their TFSA's RSPs while maintaining storage, insurance, and liquidity, the ability to buy and sell this like they would an online stock or anything that they have in their portfolio. And it is by far the safest and most secure way to invest in bullion. And with this method, your precious metals are fully allocated to you as an investor, segregated from the rest of our holdings or other clients in a depository facility that is not a bank. It is a privately owned institution which is regulated by the government and cannot be touched with the hands of the government, so to speak, for those that worry about putting your bullion into a bank or a safety deposit box. The depository is fully secured, insured, and it's located in Canada, which means there is zero, and I say this because it's an important point, zero counterparty risk associated with your bullion holdings. There is no worry about the internet shutting down and zeros being evaporated from the digital platform or anything of that nature. This is physical bullion, which if need be, you could go and get and take home. If you wanted to deregister that account at any time in the near future, upon retirement or going into the RIF and LIF eras, there is delivery receipts, there's inventory statements that include bar and serial numbers. Direct access to your precious metals is completely available, and you buy and sell your precious metals within seconds by phone with a Delta representative. So it's the best of everything in the world, and it's very easy to do. And as an authorized bullion dealer for Questrade, clients will utilize Delta Harbour services to buy and sell physical metals within their registered accounts, and that's it. We don't advocate management of portfolios. We're not here to tell you what to do with your Apple stock or anything like that. You can have it in your portfolio if you like through the Delta account using physical precious metals in your portfolio, but it all starts with that visit over to our website to get educated, to find out more. Gosh, we'll send you an email, and in the email there will be no fine print. We will tell you exactly how it works, functions, and how to get the account open. And it's as easy as open up an account with Questrade, funding the account, connecting Delta through what is called a dealer authorization form, and then making your bullion purchase. And you will get the reports. You will know where you stand. You have a dashboard to log into, and you can add other exciting different components to that portfolio and have fun with it. And like you said, John, the RESP, another great option. I know we don't talk about it often enough, but setting something up for the kids right now while gold and silver are in their infancy stages of a bull market that lies ahead could be another 10 years. Perfect timing for when your child turns 18, college, university on the horizon. I know I did it with mine, and it's easy to do. It doesn't take time other than about 15, 20 minutes to set up the account. And you can have your finger on the pulse with all the updates from Delta. And you know what the best thing of all, John, is? There's no management fee. The biggest complaint we get from people is that they have mutual funds. They have other people involved with their money on a year-to-year basis. They pay that average 2.5%. And what do they get for it? Not even a single phone call. Nobody touches base. Nobody calls. Nobody sends a Christmas card. Nobody does a single damn thing. But they take that 2.5% as a management fee. And over time, that 2.5% can add up to quite a lot. And so ultimately what we're saying is there doesn't need to be a management fee. We get taken care of by the original bullion purchase. You get our management there. You get our expertise. And if you want to buy and sell through this bull market, you'll be able to do so directly through Delta Harbour. And it is a fantastic account to open up.
What are we talking as far as eligibility is concerned? And then what kind of registered saving plans does this qualify for?
Well, RSPs, a regular registered retirement savings plan. As we said before, the registered education savings plan. You can get a life income fund going with this. You can get the registered retirement income fund. You can get the locked in retirement account. And all bullion products offered by Delta Harbour are what we call London Bullion Market Association approved, meaning they have global liquidity. They are the best of the best products that you can put into these accounts, with purity in silver at 3 nines or higher, and purity in gold 4 nines or higher, which is the purest 24 karat. So ultimately, you've got the best of everything coming together as a combination here. And Questrade is an IROC approved, as is the depository where our precious metals are held. So they are regulated. They have all of the safety features in place. We do a little bit of know thy client, and another wonderful feature, John, you can bring it over from an existing account anywhere you are. Doesn't matter what the bank or credit union is. If you have an existing account somewhere else, a registered plan, you can bring that over to here. And I don't think, John, most people realize you can have as many RSPs or TFSAs as you would like to have, as long as you're adhering to the rules of contribution. So if you are allowed to put $75,500 into TFSA because you've never had one and you qualify for the maximum amount of contribution, then you needn't worry. You could have 30 TFSAs as long as your input into those TFSAs doesn't add up to more than 75,500. So ultimately, we make it very easy. We hold your hand through the whole process, and it's physical gold and silver. It's what we've been preaching all show, John, talking about today in the show. It went by so quickly. Pay attention to that website, deltaharbor.com. It's constantly being updated with articles, features, and talk about all of the things we discussed today. We got the e-store up and running now, so you can buy online for your direct delivery home, and a contest coming up in December, which we'll talk more about next week.
And that'll do it for another week. Again, eStore, deltaharbor.com. You'll find that there. The phone number, 1-877-323-GOLD. Congratulations again to Darius, who won that 10-ounce Royal Canadian Mint silver bar, for having a conversation, getting his portfolio up and running. As Darren just mentioned, there will be more in the near future, so stick around for that. And we'll catch you next time right here on Hard Money on Sauga 960.